Welcome. I'm Scott Richards from Beyond the Numbers, and welcome to Basic Training. And this is lesson number 1. And today's lesson, we're going to focus on how much profit you need to make for a sustainable business. And for sustainable business, I mean you are able to pay the bills each and every week, and you don't have a problem with cash flow. And because cash flow is the main reason why majority of businesses go broke. So let's start with your salary. So let's say you need at least $50,000 a year to be able to live, or it's worthwhile for you being in business. Otherwise, you're better off going and being in a job. So you made $50,000 profit, and if you made $50,000 profit, then you spent that all on your living expenses. Then you're going to have a cash flow problem, because there's other things that you need to pay for, which means you need to make more profit for. And this was a common problem that I had when I was working in public accounting. People would come in, okay, you've made $50,000, and they say, well, and so you owe $15,000 in tax, and like, that's not possible. I haven't got any money. How have I made $50,000? And so this is why I've started with this in lesson number 1, is to show you other things that you need to make extra profit for to cover. So let's say you've got loan repayments, and whether you've got a vehicle or you've had to buy some sort of equipment, and you're making loan repayments each week. And let's say your loan repayments, excluding your interest, is $10,000, so you need to make an extra $10,000. What if you want to buy some assets? So if you're buying a computer or whatever, and you're not borrowing the money for, then you need to make extra profit to be able to pay for those assets. Yes, you'll be able to claim depreciation, but that's over a number of years. So let's say $5,000 you're buying in assets that you're not borrowing money for. Another thing that you need to consider is the cash cycle. Now, I'm not going to go into too much detail here on the cash cycle. The cash cycle is basically your debtors, your stock, less your creditors. So especially in small businesses that are growing fast, their debtors and their stock will be growing, and that's affecting their cash flow. And so if your debtors and your creditors are growing faster, your debtors and your stock are growing faster than your creditors, then you're going to have to make extra profit to be able to cover that growth. And let's say in this case, it's let's say $5,000. Now, lastly, is also tax. It's a cost of doing business. So you got to make enough money to be able to cover for your profit as well. Sorry, you got to make enough money to be able to cover your tax. So in this case, let's say $10,000. So you want to make $50,000 to be able to cover a salary, otherwise you're better off working. But on top of that, you've got another 10, so you've got 60, 65, 70, $80,000. So if you've made $50,000 during the year and you just used it all on your living expenses, and you haven't saved any, then you're going to be $30,000 short. So why you need to know how much money you need, why you need to know how much profit you need for a sustainable business, is so that you've got something to aim for. So from this $80,000, then we can extrapolate to get how much sales you need or how much expenses should be, and we'll do that in training number 2. So thank you for watching this. So thank you for listening to basic training number 1 and basic training number 2. We'll work on how much sales you need to make based on $80,000. Thank you.